And otherwise, this typically is about 15 minutes or so, and hopefully you'll have some. Okay, recording's on. So thank you for catching that. Yeah. So today's topic is anything related to pre-approvals. What does it mean? What's pre-approval mean? What does pre-qualified mean? There's this new fully underwritten pre-approval. It's not really new, but it's coming back into play. I hear some people coin the phrase power pre-approval. It's kind of that idea. So we were just talking about how it's hard because there's not really an industry-wide definition of pre-qual versus pre-approval versus whatever else. So we can just speak to what we do internally, and hopefully that helps you, whether you're a real estate agent, an attorney, you're a buyer, you're a seller, whoever you are fitting into this housing market right now. Oftentimes there's competitive situations. So how do you know that letter that you're looking at from the lender actually is worth the paper it's printed on, right? So Bobby, tell me what let's just start with the baseline, I guess. Pre-qualification.
Sure. So pre-qualification, in my opinion, for a realtor, it really doesn't do much. It's really us just having a conversation with the borrower and them basically telling us, my credit score is about this much, this is how much I make, and these are my debts. So they're not giving us anything. We're not running any type of credit report. And when I say giving us anything, I mean documentation. And basically what we're doing is we're doing some like math and saying, okay, you could potentially qualify, or yes, like, if they're great, like it's like, you'll qualify for a mortgage, and then we just have to narrow down the details of it. Or, for some people, it's like they just don't make enough money to even qualify for anything in our market area that's going to make sense. So they don't go through the whole process. So it's like good for the buyer to get a quick baseline of, okay, should I take the next steps in this process?
Mm-hmm. So kind of more of the planning phase. And I think what's funny is that, so we both, for those of you, if you don't know me and you don't know Bobby, both of our parents, so my dad and Bobby's dad, started in the business 100 years ago. So we grew up in it. So pre-qual, I remember when I started listening to my dad, that was kind of the norm. Because you didn't have to follow so many underwriting guideline standards, frankly, right? Like someone could just call up, say, I want to get pre-qualified. What do I need? We'd have a nice chat. My dad would write it all on the back of a napkin. It'd look some crazy handwriting, right? And an hour later, he'd be best friends with the customers and they'd be pre-qualified and they'd find a house, and it was a lot of a different process. But it's really so much more in depth now, as you know. But I think sometimes it's tough because if buyers are coming to us and they talk to their parents who bought a house 30 years ago, they kind of have this expectation that's a little different than what's actually happening. And getting prepared to buy a house now, that pre-approval process really is something different. It's unfortunately, I guess, or fortunately, depending how you look at it, less of just the, all right, you tell me verbally what you do, I'll tell you verbally what I think you can do, have at it. So next level, and really what kind of the norm is to get pre-approved. So Bobby, you want to talk about our pre-approval process a little bit?
Sure. So a pre-approval is a client fills out a full application and you pull a credit report, either a soft inquiry or a hard inquiry. And they put in their income, their assets, and you run it through an automated underwriting system, and you get, hopefully approval, and then you have a pre-approval. But there's two different levels to that. So there's one where they just basically fill out the information and don't give us any documentation. So, those ones depends upon the borrower and how confident you can be in something like that. But then there's the better version where we collect all their pay stubs and their tax returns and their W-2s and their bank statements and everything. And we, as the loan officers, fully review those items and, issue a pre-approval letter. Now, our way of doing it internally is to always collect all that documentation, except in a rare scenario where it's a fire drill or something. And,
Yeah.
maybe it's a salaried W-2 employee. So we can have like confidence because, we've looked at their credit and everything is great. Right.
Yeah.
But you can't rely on that with a lot of situations. So,
Yeah.
as a realtor, if you're sitting there with these letters and you're trying to decide, okay, which offer is the best, we get calls all the time from you guys asking us questions, and we try to get permission from our borrowers to be able to answer those questions for you. And what you really want to know is, did
Is
you
this going to work?
yeah, I mean, did you want to work? But it's like,
It comes
there's
down to the
obviously
loan officer though, right? Because you want to ask the loan officer, what did you actually look at? Because
right.
just like you said, Bobby, somebody can call it a pre-approval, but they might have not even actually done a credit check. They might not have even actually looked at their financials. I looked up the definition on the CFPB website, Consumer Finance Protection Bureau. There's not really now I'm not a compliance person. So some compliance or attorney would be like, Lindsay, it is a clear definition. It's not. It basically just says that somebody has to look at something and say the buyer's pre-approved. It's like, it's clear as mud, right? So you may have a letter in front of you that says pre-approval, but call that loan officer if you don't know them already and just see what they actually did.
Yeah, it's a big thing. So
yeah. Yeah. So pre-qual, super basic. That's more just like, hey, buddy to buddy, what do you think we can do? Let's chat. When people are feeling really ready, the pre-approval is actually what they need. Timing wise, I get that question a lot. People are like, well, I don't want to go through a pre-approval if I'm not going to buy for another year. Frankly, there's no harm in doing that. We can do a soft credit check, like Bobby said, so that doesn't even impact credit scores. So I say, continue on that journey, get the real information. There's no cost to pre-approval other than your time, right? So I think that's huge, whether it's just an informal chat or like do the application, get the real numbers, either way. And then people often ask too, when does that pre-approval expire? Well, technically the credit report does expire at some point. Is it 90 days or 120?
120. Yeah.
120 days. So like 4 months, but really, as long as we're staying in touch with each other, we can keep that pre-approval updated and not invalid, valid indefinitely. So we've got people that find a house in a day or a week, or some people that have been looking since, 2018 that are still out there. So yeah, bottom line, I think, is just really look at the letter, look at the lender, call them. You don't want to get into a situation where somebody's been looking for a house. I just had a call the other day. Somebody had been looking at a house for literally 2 years with their realtor. They were pre-approved by a different institution, and they finally got an offer accepted. And the other institution asked them for their documents and came back and said, oh, sorry, you actually can't qualify for this house. So for 2 years, that agent and those buyers were running around looking at houses. That to me should not happen. But again, there's no policing of pre-approvals or pre-qualifications. And so unfortunately, people are really at the mercy of the loan officer that they're working with. So how can we avoid that a step further, Bobby? You want to talk about fully underwritten pre-approvals?
Yes. So for those people that are like really actively looking and looking to make offers and everything, the best pre-approval is the fully underwritten credit approval that we do. Not all lenders do it. Some do. We're one of them that does it. And what we do there is we submit a full loan application with just a to be determined property address, and we take it like it's a real loan. So it's going to be everything except for like the title and the appraisal and obviously the homeowner's insurance. And it goes directly to the underwriter, who's the final decision maker, and they're going to review all their documentation. They're going to run all the fraud reports that get run. And so anything that, would come up in underwriting with regards to the buyer itself, we're going to review and, sign off on ahead of time. And then you have this letter that does look different. And it does say, I mean, everyone's going to be a little bit different, but we try to make ours like obvious of what it is. But whenever we have one of those, we'll talk to you as the realtor of the buyer too and explain fully what it is, because if you just hand that to the listing agent, it might just get lost with the other pre-approvals. So you're definitely going to want to do a little bit of like, talking to the agent and just saying, hey, this person is fully, credit approved already. This is a credit approval letter, just subject to the property. And that takes, a lot, out of things, because now you can potentially close faster because we've underwritten them. Now we basically, if we have to do an appraisal, we do that, we get the title and verify the deposit checks, and because the rest of it's taken care of.
Yeah.
It obviously makes you more competitive in your offers and the things you can do. Some buyers, and again, we're not suggesting that you necessarily do this, but some buyers are at that point, comfortable waiving financing contingency clauses, depending upon, how much they're putting down and appraisal values and all that stuff.
All the stuff that our compliance doesn't like us to talk about.
Yeah,
So we're
yeah.
not
I mean,
advising anyone.
yeah. Well, I mean, I never advise somebody to do that, but this market.
You may want to. Yeah.
It's the same thing with home inspections. Like, I wish,
Right.
this Massachusetts law would pass and like, you couldn't make offers subject to waiving home inspections.
Yeah, that's going to be interesting.
Yeah. So it's, so the biggest thing is obviously protecting yourself as the buyer. But as you get more into it,
For sure. And I think the thing, so I'm like a data geek. So I was looking at HMDA, so Home Mortgage Disclosure Act is all lenders basically have to report data in. It's pretty much like census data tracking. And so according to HMDA, what year was this? This is through 2022. So 23 info wasn't out yet. But can you guess what the number one reason that loans get denied is from?
No.
So debt to income ratio.
Sure.
And then credit history. So our job, right, as lenders is to mitigate that. What are we looking at when we pre-approve buyers? We're looking at their credit scores and credit history, their income and employment history. That's the debt to income side of things, right? Credit score, credit history. And then we're looking at their assets and do they actually have the ability to buy. The insufficient down payment was the least thing, because that's probably the easiest to sort out, right? How much do you have in your bank account? You're not really going to mess that up or lie about it. I think the tricky part is the income side of things and the debt side of things. So if the lender isn't actually looking at pay stubs, bank statements, W-2s, tax returns, divorce documents, whatever else, right? Property information, there's a lot of room for error there. And the thing is that consumers, normal people on a day-to-day basis aren't looking at their financials the way that an underwriter is looking at them. So when we say to someone, how much money do you make per month? They're going to say a number and it's what they think they make in a month, but it might not be what the underwriter is. So I guess from a real estate agent perspective too, when you're screening your buyers, especially in this market, because you don't want to run around with someone and not have it work out. If somebody has any type of variable income, self-employment, anything that has overtime, commission, bonuses, like that isn't just super straightforward. If they can't say like, yep, I make a guaranteed salary of $80,000 a year, many loan officers, no offense to all the other loan officers in my industry, but they're not going to know how to calculate things correctly. And unfortunately, if they don't ask for documents, people can really get into trouble. So we're seeing that. This video and talk was prompted because we are getting calls weekly, sometimes even daily, from people who are under contract and getting denied. And to me, again, it's just such a disservice on the front end, on the pre-approval side of the process. And it's typically something to do with income that wasn't calculated correctly. So that is all can easily be mitigated by just having a good pre-approval done up front. So considering, like we've talked about, what's the lender doing up front? And then can you do that fully underwritten pre-approval? Not everybody needs that or wants that, but it can help either if you have a really tricky financial situation and you just want to make sure you're all set,
Mm-hmm.
or if you're going up a lot of competitive multiple offer situations.
It can also come into play in like unique situations. Some, that should be more obvious. Like we've gotten pay stubs before and like notice, oh, there's now undisclosed child support. So that like
Right.
changes everything. It's like coming out of the wages. But to go back to a fully underwritten pre-approval, like one of the great benefits of that stuff is all the reports that get run like on the back side of that. And it's like we've had instances before where we've had people like, oh, I'm a first time buyer. But then like, oh no, you were added to the deed
Oh
of like
yeah.
your parents' house. And
Oh
it's
yeah.
like, congratulations, like you're a homeowner,
Yeah.
but you no longer qualify for this first time buyer
Right.
program. So
Right. This is why I have more gray hair. Not just my kids. It's when stuff like that happens.
right.
And that, I think that's an important thing too. Like the size of the team that we are and the company is. So for those of you who know us as Applied Mortgage here out in Western Mass, and we're a team of Harbor One Mortgage, which is a New England based lender. Every single pre-approval that we do comes back to us, comes back to me, comes back to Bobby, comes back to our reputation. And we both have legacy reputations that we're continuing to build on, right? From our parents doing, or our dads doing this too. And I think that, for whatever it's worth, really makes a huge difference. We are not just working some 9 to 5 for some giant company that we do not care about, right? Like that, it comes down to that too. So, so that's sentimental stuff aside. One last thing that we wanted to point out too, or plug too, that we've been having great success with, and we have an upcoming webinar on, is our home run, which the name, whatever, it's so cheesy. I'm like, you want a home run offer? Do the home run program. Home run cash offer program. Tell me about it.
Yeah, so it's more of a service than a program. And basically, once one of our clients has gone through a fully underwritten pre-approval and we're really comfortable with them as a really strong buyer, we offer this optional service for them as long as their purchase price is, $1 million or less and they have a conforming conventional loan that will become, in essence, a third party to the transaction, like behind the scenes, and will back the offer with cash. So we're, a local lender that is telling the seller that, yes, this buyer is getting a mortgage through us, but if for some reason something happens to them, like they unexpectedly lose their job and they can't qualify for the mortgage, we are still going to complete this transaction at this price on this closing date. So it's really a guarantee to the seller. So it makes that buyer, that much stronger because they're backed by, this cash service that we have.
Yeah. Yeah, it's awesome. We've had quite a few accepted offers this spring when it's been multiple offer situations, and buyers in all different price calibers and everything, right? Different down payment sizes, different all over the map. So that webinar we're hosting, our home run cash offer program webinar, is next Wednesday. I had to look at the calendar. Next Wednesday, at 12. So Wednesday the 12th at 12 again. And always on our website, appliedmortgageteam.com/monthly-webinars are all of our webinars. We have a monthly first-time homebuyer webinar that we do. We have a monthly repeat buyer webinar. So those are just standing webinars that anyone interested in buying, selling, refinancing, building, whatever, can tune into. Very low key, laid back like this, just a place to kind of get your feet wet and then hopefully help people feel more comfortable with the lingo and all of that stuff to move on to next steps with all the other parties involved. But real estate professional specific topics like we talked about today, next Wednesday, the cash offer program. And then on the 26th, at 12, we're going to be talking all about the requirements for condos, because condos can be another place that people get tripped up. And I'm not even going to begin to describe it right now, but there's a whole change to condo insurance deductibles for the condo association as a whole. So we're not just talking about the individual unit. We're talking about potentially condo associations needing to change or just be aware of what their insurance needs to have. And these are Fannie Mae national mortgage guidelines. So, you know, it all ends up trickling down anyway from there. Awesome. Thanks everyone for tuning in. If you have other topic ideas, again, please reach out, send us a text, an email, whatever. If you want to come on and just chat with us, we would love that. We are always interested in other guests. And thank you, Bobby, for being here today. Don't forget to like us on YouTube. And I think with our 3 views, we are most likely going to break the internet. So we'll be back for more. See you later, everyone.
Thanks.